Hi, Michael here, March 3. Welcome back to the channel. Today, a bit of a different update than on other timings. We'll not be spending too much time on the watch list and going into detail in what the different stocks are doing, as well, a lot actually is happening. I can't say that nothing's happening, but these are all markets flirting for already 2 weeks with little pluses and little minuses. Obviously, within those markets, there are white ravens where there are big movements in the positive and in the negative. But today I'd like to spend a few minutes with you checking out what's actually going on, because we're reading every day again in the prognosis that there is good news. All the markets are doing well. Industries and companies are performing excellent. And nevertheless, we see that translated into bad news and into negative behavior. So what is actually going on? Everybody is a bit surprised that since the beginning of the year, despite what is happening, the wars, the increased fuel prices, which actually also are going down now, the increased food prices, which are not yet coming down, the fear for a harsh winter in Europe, which now looks to be not so harsh as we have feared, although March and April are not yet over. So we may still see something. Now, despite all that, we see great performances in all the markets. We see the stock exchanges doing well, and we see both in the US and in Europe, individual companies and industries performing excellent. Now, what may happen is that these industries and these economies keep on performing so well that they are actually starting to overheat. And what you then will see is a further increase of prices, which we call inflation. And that is something that central banks and governments want to prevent. And typically, how you slow down an economy is by increasing the interest rates. Now, what is typical in the relationship between looming interest rates and performances on stock exchanges is that even the fear for interest rates may already cripple a stock exchange. And obviously, if these increased rates are materializing, and particularly if they are higher or more aggressive than was expected, then you will see obviously also the price of capital going up, companies being able to invest less, and then we'll be entering a recession, which, if that is not being countered, is in the short and midterm the end of the economic performance, breaking this circle then at some point here. So that's actually where we're going on, and in this we're in this phase here actually. Economies are not yet really overheating, mostly because job markets are staying strong without big salary increases popping up. But there is this constant fear whether the interest rates will rise with more or less than 25 base points or 50 base points or what have you not. And this can go either way. If we can keep this period where these rates remain relatively low and where the increases remain relatively low, then we'll see the economies continuing to perform without a huge inflation and therefore without a fear for a recession. If obviously the central banks and the governments decide to increase the interest rates more than that the markets can swallow, yeah, then this year may end up different than it has started. So that's the explanation of what's going on. And yeah, nobody can predict obviously how long this will continue like this, and if it will continue like this, and what the alternatives are. So the only thing we can do every day is sit here, watch what's happening, do an analysis, draw our conclusions, and try and find the white ravens in the markets. And that's why I have this watch list that I filter down into a sweet spot. And I remind you, the sweet spot are those shares with a rating of accumulate or buy, and the spread between the current price and the first resistance of at least 10%. Yesterday there were 6, and today there are 6, at least in my watch list. There are some changes here. There are some of these shares that were in the sweet spot yesterday and that have come back today, like Hostess Brands here, Cosmos is there, Addis is a new one, Anderson is a new one, Adapt Health was there, and on the number one with a spread of 33.42% is Volaris Aviation. As I was explained yesterday, I'm not impressed by these huge spreads. Uh, they can be a signal of a share that is actually reaching the bottom and may have a very long period to recover. In case it is good news, it could be a share that has just broken the first resistance and is still very strong. Short, mid, and long-term indicators all very positive. So it's not because this is in the number one of the sweet spot that I would be buying this. What I would be doing every day is making a detailed analysis of the shares in the sweet spot. All the other activities that I'm doing is just to create that funnel that ultimately ends up in the sweet spot that deserves to be analyzed in detail. Two other things that are remarkable, as you can see, I keep on maintaining the file with a lot of discipline, so it's completely up to date. But what is more interesting from a content point of view, over the past weeks, we've been seeing the share of the stocks with a rating of sell or decrease diminishing up to where it was like 5-6%. And the larger part with shares within a rating of accumulated buy, like almost over 25%, if not more, that trend is reversing. That could be an indication of a cooling down economy. Could be of a consolidation in the markets where there's a rationalization going on and where people were more positive about shares with a rating of accumulate than they should have been, and getting back to the basics. I don't know. I don't know what's going on. Just as I don't know what I'm doing. But as long as you're having fun, that also does not matter. Having said that, this was a quick update of today. Not much news other than trying to explain what the news is. I hope you found it of interest. If you do, please try and share these videos with friends and family who might be interested as well. And thank you very much. We'll be back again tomorrow.